Bring it
Yeah, so
on.
the fifth topic today was the U.S. housing becoming more expensive, which obviously isn't something brand new to today. But what it is that we're seeing a lot more funds, right? Bigger investor entities buying houses for the purpose not of owning them, but of renting them, right? So they want to have a portfolio of homes that they can rent out and then collect the revenue stream, which could be seen as a way to bolster into your fund or into your account or just as a return to yourself. As we know from 2008, that's not good enough because just making that money is not putting that money to work, right? So how do you put money like that to work? You can securitize things. You can create an asset that you can sell on the market. And what does it basically, what does it derive its value from? The cash flows of the renters of all the properties you hold on your portfolio. So, and they estimate about 1 in 5 homes bought by people aren't actually having people move into them. They're being bought to be owned for renters, and you're seeing a huge increase in the value of rental homes as opposed to homes that are being owned because people want the rental revenue. They more money that way. And let people come in and out. They don't have to have one homeowner owning this property forever. They can keep getting new clients, and then they can raise prices in between. They have a little bit of some flexibility there, or at least the potential for flexibility down the line. I imagine if this becomes a much bigger industry, you'll probably see lobbyists, if you don't already, pushing for the ability to have more flexible rates and be able to stay competitive in their pricing in terms of the rental rates. Um, but one of the things here is a quote from one of the firms, the Wall Street Journal: "Limited housing supply, low rates, a global reach for yield, and what we're calling the institutionalization of real estate investors has set the stage for another speculative, investor-driven home price bubble." So I think there's some truth in that because home prices are already up high, both because no one's building as many anymore because the things are being materials are expensive in Jersey, like the price of like a 2x4 is tripled. And then you have people that are just have high demand because they're moving out of the cities into the suburbs. They want to be safer from future pandemics. And if you're in a city, generally when there's illnesses and zombies and monsters and death, closed spaces with lots of people generally doesn't do so well for you. Um, but there is a bit of truth in here because if they're bidding up these prices as well, then you're seeing additional price pressure now. Houses
Mm.
going up in value because now investors are bidding for them. Investors want to buy them. So you're seeing an increase in the price of these homes artificially just because there's more demand for them for a specific investment purpose. And then, like I said, if you have securitization, it's a bit safer in this way. I don't know if that's going to happen, right? This is me speculating as to what the next step could be in that cash flow. But I think it would be safer in this way because people don't own them outright, so they can't default. The businesses own them, right? They have more control, more capital to back it. But you never know when you have securitizing of revenue. If you have enough products that you create tranches like you did in 2008, and you have the lowest likely homes to be paying rent, and then the ones who are always paying rent in the better areas, you can structure it the same way. So I think some people are smelling a little bit of a similar whiff from 2008, both in the price of housing and the potential for what comes next with that revenue.
Mm-hmm.
So that's definitely something we're going to have to watch, as well as just housing prices overall. So I think that's definitely something that we'll be looking into for. And the home prices are expected to climb about 12% this year. That's on top of 11% last year and 6% the next year. So definitely expected to definitely price. I definitely prices will go up. Period. I don't know exactly what percent, but I definitely think you will see a price appreciation. And I don't know if that is the time to buy a house because prices are so high and the valuation is due to dwindling supply and investors pumping into the market. Is that value actually there for that building? Is that asset actually worth that much money? What I mean,
It's
buy high and then
definitely
wind
a
up finding your
seller's
asset worth
market.
less. Yes.
Definitely a seller's market. And that's the thing, even here around here in Ohio, a lot of people have to, in order to get the house, they have to do asking above what it is priced at and above asking. And then that's when they're able to actually get the house. And these houses could flip within 24 hours.
Yeah. So the market's hot. People want to make their profits, and once you start looking at homes as just another financial asset, you can trade them and inflate their prices, and they can suffer the same market forces as other assets. But the problem is, this is where people live. These are homes. These aren't sandwiches. These aren't stocks, right? So it creates more of a damaging effect because the investments and the people that use these things, it might be it might be a bigger impact because people use them. They're bigger investments for human beings, as opposed to just having a stock portfolio. It's definitely something to watch. Definitely some big news today. I found that very interesting. Definitely something we have to keep our eyes on, and you should keep your eyes on just in general as an investor.
Yeah, I mean, I know I've talked to people where they've said that even though like their house has maybe even doubled in value just over the last few years, they wouldn't sell only because the outcome of getting a new home, the difficulty has become so great that it's just that catch 22. It's like, yeah, you could cash out with a lot of money, but then you're homeless. You know,
Right. And if you can't find a market where the houses are affordable, the prices keep going up and they outpace your ability to buy, then you're stuck saying, well, we can't get our dream home, but now we need to find a home, and
any home.
we might be buying something that's not worth it. That we can actually that was used to be in our budget that we was below what we wanted to buy, right, in terms of value and size, but now it's worth this much. So I sold the money that you have, right? And that's the market forces at play, which when it comes to housing, if you think about it, if you think more and more homes are bought up for the purpose of being owned by a firm to rent, how do you buy those homes from those firms? Or is it going to become a phenomenon where you just see more and more, young millennials and newer generations that are just stepping into a world of rent? So instead of actually being able to physically buy homes and own them, they have to rent them. So that could be interesting as well. I wonder how that's going to go, because I want to own a home. I want to own property. I want lots of yard space. I want my neighbors far fucking away from me. You know what I mean? I don't want to just be, hey, welcome to rent a home, and this is this beautiful house, but you're going to rent it and pay me money each month, but you're never going to pay it off. You're never going to own it. You're going to rent it for decades, but you're never going to own it. But I'm not sure if that's, I don't know how it all works. So we'd have to obviously look into that. Maybe they'll have a way of saying if you live there long enough and rent long enough, you can buy the home from them. Uh, Interesting, nonetheless.
A rent to buy. I mean, they already have that to what in cars. I'm pretty sure they're gonna have that in homes soon enough, but that's gonna be like people locked in. It's gonna be a higher interest rate, and it's gonna be like milking
Well, if
them
that
until.
happens, well, because that's the other thing too. We have the lowest mortgage rates pretty much ever. We're not seeing as much refinancing activity anymore because low rates don't seem to matter. So if people buying houses want to get these prices very high values at these low interest rates, if interest rates go up and the house value falls, housing value decreases, the size of their assets and collateral decreases when they'll also have to start paying more.
Mhm.
So interesting. It's interesting development. Whenever you hear about housings and bubbles, your first thought is 2008. So I don't think we're there yet. But again, just like as everything is inflating, we're in a very weird spot where everything is so expensive. Everything is going up in value. So we really have to be careful here about what you buy, when you buy it, and how much you spend on it. So
Sounds good.